Good morning, everyone. Jesse Webb, TradersPro. Happy New Year. Markets are closed today, but we'll go through just a brief update here and take a look at a couple things we might be able to prepare for tomorrow and for this week. Market conditions still bearish in a bear market. Trend is still down. We're towards the end of we're kind of right in the middle of that momentum downtrend. Talked about this for this last week, where we're seeing momentum moving lower over the last couple weeks down to here and toward the lower end of that range. So whether we're going to get a little bounce higher and continue to test this range, that's yet to be seen. But this overall downtrend in S&P 500 is still intact. That needs to be our overall bias going forward again to this new year. So really, that sentiment, I've talked about this before, this sentiment location, typically this is way too high for, grab my little pen guy, what's happening there? Sorry about that. There we go. This sentiment location is still a little bit too high for a bottom to be taking place. Typically bottoms, that sentiment's got to pull back down. There's not going to be a lot of optimism at a market bottom, whereas right now we're still seeing a lot of optimism. So one of the two has got to catch up with each other there, whether that's price activity or whether sentiment catches back up. So we'll see which one takes place. We have sentiment, which is our buy-sell ratio, still in this downtrend, and so we're keeping an eye on that here. That's our current bias. This will move back here. We typically see that where we get a first move higher as things are crossing over. We get a pullback and then one more move lower. So we'll see if this pullback we're getting now, we get another move higher. What that looks like on the SPY chart is looking for a little bit more of a retracement back up. So we've talked about this counter trend, this being the new trend direction, this being our kind of our consolidative counter trend location. So we could definitely see a little bit higher move up to retest that 386, 387 level on SPY, but that still should be considered just a rally, a bear market rally in an overall downtrend. So be cautious of that this week. Be looking for opportunities on any rallies to be setting up bearish trades. And there are quite a few good-looking bullish stocks still in this new buy list. As far as what I mean by still is, even in a bear market, there's going to be opportunities. And so, glancing through some of these names, you're seeing uranium, you're seeing Baker Hughes, which is oil, you're seeing Noble Drilling, you're seeing still seeing some biopharma in there. So still kind of a mixture of some of those leading sectors, which have been energy, which have been biotech here in the last few months. CTIC actually is a good looking little chart here with a nice bullish profile, nice trend profile with the potential breakout here. Obviously that's not going to be open today, but tomorrow when the market opens, keep an eye on that. If I run down here to this new buy list, MANU also, this is a consumer discretionary. So we've also seen, which is interesting, some consumer discretionary stocks moving higher. That could be in anticipation of inflation coming back down. It's always hard to know the exact reasons why things are moving, but we're seeing some of these setups still some nice looking setups on some stocks. Oil and energy, Noble Drilling. That's actually a good looking little chart pattern right here. Again, when I say good looking, this is what I want to see. I want to see this trend profile. I want to see a retracement and then having it start moving back up so that we can kind of avoid this chop and this mess. We want the trend to start to begin again, and that's what we anticipate on one of these kind of a chart patterns. Things turn back green again and we end up looking something like this. If you don't have full access to the site, you can sign up with the link below, and we look forward to having you. Have a great day today.